Bitcoin slips under 113.9K while Kanye's YZY rockets to a $3 billion cap, then dives. Powell speaks in hours. Which move will hit your wallet first? Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is August 21st, 2025. I am Nova.
I am Satoshi.
Diving straight into the market movements. The cryptocurrency space has indeed seen broad, modest gains over the past day. It's rebounding pretty effectively from that brief pullback earlier in the week. Bitcoin is up about, 0.7%, finding its footing again after dipping when those hopes of an immediate Fed rate cut softened a bit.
Right. But what really grabs your attention, I think, is Ether. It jumped over 2%, noticeably outpacing Bitcoin there.
Yeah, that's significant.
And one striking element from this recent activity is how Bitcoin's dominance, its share of the total crypto market value, has actually slipped. At a 6-month low now.
Wow, 6 months.
Yeah. And this isn't just a simple rotation. The specific types of altcoins attracting capital, particularly those tied to real-world assets or specific Layer 2 solutions. Well, that signals a more fundamental shift, I think, in investor confidence beyond just pure speculation. The overall altcoin market cap has surged about 50% since July.
50%?
Yeah, 50. So that's definitely fueling strong talk of an impending altcoin season.
Yeah.
It suggests a growing appetite for higher risk, higher reward crypto assets, even though sentiment, it still remains sensitive to those broader economic signals.
Right. Okay. So these market shifts, they don't happen in a vacuum, as you said. What are the larger macroeconomic currents that are really driving this sentiment? I know all eyes are still on Federal Reserve Chair Jerome Powell's upcoming speech at Jackson Hole.
Absolutely.
What's the latest on expectations there?
Well, traders have significantly pared back expectations for a September interest rate cut. It's quite a shift.
Really? How much?
A week ago, there was nearly 100% probability priced in. Now it's below 85%.
Okay, that's a big drop.
Yes. And this adjustment is largely due to stronger than expected U.S. economic data, which has kept the U.S. dollar index elevated near multi-month highs.
And a strong dollar makes crypto more expensive overseas, right?
Exactly. A firm dollar means their local currency buys less U.S. dollar-denominated crypto. So it acts as a kind of mild headwind. And you saw it on Monday that Fed-driven sell-off in Bitcoin and Ether really underscored just how sensitive digital assets still are to shifts in U.S. monetary policy.
Yeah, absolutely. So, okay, beyond the price movements, the regulatory shifts, these are often the most impactful long-term. What are you seeing that's particularly noteworthy on that front today? It feels like we're witnessing some surprising moves, both from traditional finance and within regulatory bodies themselves.
Absolutely. There's quite a bit happening. For one, a coalition of global finance industry associations, including big names like the Institute of International Finance, urged regulators to rethink strict new bank capital rules for crypto assets.
The Basel rules.
That's them. They called the Basel Committee's 2026 standards overly conservative and, frankly, economically impractical. They specifically requested a temporary halt to implementing that 1,200 to 50% risk weight on crypto exposures.
Which is essentially a killer requirement, right? It makes it super expensive for banks.
It's extremely punitive, yeah. It severely limits their participation. Their argument is that crypto markets have matured, they've become more intertwined with mainstream finance, and such strict rules are actually counterproductive now.
Interesting pushback. And even within U.S. regulators, I saw there's maybe a discernible shift in tone.
There seems to be. Federal Reserve Governor Michelle Bowman recently suggested that Fed staff should maybe be allowed to hold small amounts of cryptocurrency.
Just to understand it better.
Exactly. To gain practical understanding of the market. She kind of likened the approach to learning by doing in crafting better oversight, which, actually aligns quite well with the current U.S. administration's stated pro-innovation stance.
That makes sense. Learn by doing.
And it's also quite telling how the private sector is proactively gearing up for this anticipated stricter oversight. Look at Tether issuer of USDT, the biggest stablecoin. They just hired former White House crypto advisor Bo Hines as a strategic advisor for their U.S. expansion.
Oh, wow. He was involved in that stablecoin legislation, wasn't he?
That's right. He helped shape the recent Genius Act stablecoin legislation, which aims to provide clearer definitions for stablecoin regulation. His appointment truly underscores that major crypto firms are bringing seasoned insiders on board. It suggests Tether anticipates clear stablecoin rules ahead and, wants to be at the forefront.
Getting ahead of the curve. Makes sense. Now, while much of the focus is often on the U.S., you mentioned Tokyo earlier, significant developments are unfolding globally that highlight increasing mainstream adoption, too. What's caught your eye internationally?
Yeah, definitely looking beyond the U.S. is important. In Japan, for instance, a fintech startup called JPYC just obtained regulatory approval to issue the country's first yen-pegged stablecoin, also named JPYC.
A fully backed yen stablecoin.
Exactly. Fully backed by reserves convertible 1.1 into yen. It offers a compliant way to transact in digital yen. Initially, it's aimed at institutional investors and will be supported by local bank savings and Japanese government bonds. So quite robust.
Okay. And what about elsewhere?
Well, shifting gears, look at Thailand. Authorities there just launched an 18-month pilot program enabling foreign tourists to convert cryptocurrencies into Thai baht for local spending.
Oh, interesting. Like for tourism.
Precisely. The trial is designed to boost tourism while, importantly, diligently controlling money laundering risks. These two cases, Japan and Thailand, they powerfully demonstrate how governments are cautiously embracing crypto, but in different ways.
Okay.
Japan is leveraging stablecoins to modernize finance, while Thailand is exploring crypto as a tool to stimulate its vital tourism economy. It's a fascinating contrast in approaches, really.
Yeah, very different use cases. Okay, so looking ahead, for you, the informed learner keen on staying ahead, what are the absolute key factors and risks to monitor in this ever-dynamic market?
Right. Well, the biggest near-term wildcard remains Fed Chair Powell's Jackson Hole speech later this week. That's number one.
Still the Fed.
Still the Fed. If Powell strikes a surprisingly hawkish tone on interest rates, it could definitely spark a broad risk asset pullback, and that would hit crypto prices. Conversely, any dovish hints about future rate cuts might just reinforce the current rally we're seeing.
So expect volatility around Friday?
Absolutely. Traders should certainly expect heightened volatility around Friday's remarks, no doubt about it.
Okay. And with all this talk of an altcoin season, how should you be thinking about altcoin volatility, especially for those maybe considering diversifying?
That's a great question. The recent rotation into altcoins could indeed accelerate if a full alt season takes hold.
Right.
But, and this is crucial, you have to remember that smaller cap coins inherently carry higher volatility, much higher.
Right. Higher risk, higher reward, maybe.
Potentially. But many altcoins have already posted pretty outsized gains just in anticipation of favorable conditions. So a sudden reversal on market sentiment, or even just a strong Bitcoin rebound, could see these tokens correct sharply. Retail investors, especially those maybe jumping into trendy meme coins or newer projects, should be particularly mindful of liquidity and avoid overextending on speculative bets.
Sound advice. Now, beyond the price action and macro signals, what about those crucial regulatory decisions back here in the U.S.? I know there have been some updates on the ETF front.
You're right. The U.S. Securities and Exchange Commission, the SEC, has officially pushed back decisions on multiple proposed spot crypto ETFs.
More delays.
More delays. They've extended their review deadlines into October. This includes proposals for things like the Truth Social Bitcoin and Ethereum Trust, some Solana funds, and the 21 Shares XRP Trust.
So pretty broad delays then.
Yeah, these delays affect at least 9 applications. It suggests the SEC is taking extra time to evaluate things like market surveillance and custody arrangements. It effectively pushes any potential approvals or denials well into Q4 of this year.
Okay. But what about Congress? Anything happening there?
Well, on Capitol Hill, there does seem to be building bipartisan momentum behind the Digital Asset Market Clarity Act. That's a proposed framework designed to clearly define crypto commodities versus securities.
That clarity would be huge.
It really would. Progress on this bill when Congress returns could significantly affect U.S. market structure and investor protections. And that's generally seen as bullish for long-term clarity in the space.
Okay, makes sense. So as we start to wrap up this deep dive, after charting the recent, modest gains, the shifting market dominance, and these major policy moves, it feels clear the crypto space is closing out the day on a cautiously positive note.
I think that's fair.
There's a palpable sense of renewed interest in risk assets, certainly fueled by hints of regulatory support, and the tantalizing prospect of an altcoin-friendly cycle.
And zooming out to the bigger picture, while optimism about crypto's growth is pretty evident in developments across the globe, from Washington signaling maybe clearer rules to Japan and Thailand exploring practical applications, the space still faces significant tests. Let's be clear on that. Key U.S. regulatory decisions have been deferred, as we just discussed. And all eyes remain firmly on the Federal Reserve later this week. This constant interplay just reminds us that the road to broader adoption will invariably have twists and turns. It demands vigilance.
So for you, our informed learner, this really means staying nimble, doesn't it?
Yeah.
Balancing that optimism with prudent risk management as these global economic signals continue to unfold. The next 24 hours could easily be just as eventful, potentially setting the tone for whether crypto's late summer momentum truly builds or, encounters new challenges.
And one of the most compelling aspects here, I think, is observing how swiftly global markets and policymakers are adapting to cryptocurrencies, even as those traditional economic signals continue to hold sway.
It's a real balancing act.
It is, and it raises an important question for all of us to consider. As crypto becomes more integrated into the mainstream financial system, will it continue to behave like a distinct, sort of uncorrelated asset class? Or will its movements increasingly mirror those of traditional financial markets?
That's a great question.
Something to mull over as you continue to explore this incredibly dynamic space.
You've seen the crypto headlines. Now get the signals that impact your holdings. Money.ai scans 1.3 million signals a day, from token prices to Twitter sentiment, and gives you one personalized briefing. No hype, no noise, just your crypto edge. Download Money.ai. Stay ahead.